Now that 2023 is over and the tax man cometh for their bill, I thought it'd be important while you're preparing your tax returns to talk about the 5 biggest things that trigger an IRS audit and what is your percentage chance of actually getting audited. Hey, this is Jay over here at the Real Estate Minute Show and with Lieberman Realty Group. So the biggest 5 triggers of an audit by the IRS are generally the largest, they say. And I'm not a tax advisor. I'm just a regular taxpayer like you that has talked to my accountant. And this is what they say. The biggest trigger of an audit is missing income. Sounds simple enough, right? But it's not, because I've done it myself. You get a bunch of 1099s in the mail for interest, dividends, for capital gains from mutual funds, stock trades, all that stuff that says 1099 on it, -int, -div, whatever that is. That's income. So 1099 is all income. W-2 is wage income from your job. Both of those forms that come to your house, okay, and get mailed to you right about now, you should be getting all of them now, are the indication of your income for that particular year. All those go to the IRS too. You can't just scooch a few off your desk thinking that they'll just kind of go away. The IRS has them. And if you file your return and you're missing a few, the IRS has them. It doesn't match, boom, audit risk. Number 2 is taking big, massive deductions in comparison to your income. And that could be personally or in business. That could be charitable deductions, other deductions that are allowed, medical, whatever, that far outweigh your income level, as well as not historical from past year's filings. The third, which is kind of related to number 2, is the Schedule C income and expense, which is your self-employment income if you have a business and you're employed yourself. That's where the circus happens with expense write-off. But that is a focus, because anything on your return that allows you to change numbers and manipulate things without the IRS seeing them, like 1099s and W-2, are grounds for audit risk. Number 4 is also kind of related to 2 and 3, and that is the home office deduction, which has always been kind of a minor deduction. It's not gigantic. There's certain rules and limits on what you can do. And it's more important now because since COVID, a lot of people are staying home and working from home. So it's been kind of a bigger focus. So be careful. Just like Schedule C, like I talked about earlier, and large deductions and expenses that are not really commensurate with your income, just be careful with that also. That's a trigger. And the 5th one, which you wouldn't even think about, which I only started thinking about a couple of years ago, it doesn't really apply to me, but people that are making a certain income level can apply for Obamacare, I'll call it, okay? And by doing so, they get reduced expenses on their premiums for health insurance, okay? We all know that, the subsidies. But if you file your tax return that next year, so in 2023, let's say you got your health insurance should be $500, but you got a $300 subsidy because your income level estimate, meaning you're only paying $200 premium a month, that $300 doesn't just go bye-bye. When you file your 23 return, if you show income that's above the level you said it was going to be, they're going to come back and want that money back. And that's a form you're going to get called Health Care Marketplace, something rather, and it's called 1095A. It's a special form, and you'll see it all down there. So now that we know the triggers, what is the audit risk? And as reported by the IRS, the audit risk in 2019 was 0.59%, okay, of taxpayers, tax filers. Okay, it's minuscule. It's a little over 0.5%. In 2020, it actually went down to 0.45, and again in 2022, it went down to 0.41. The more you make, higher your audit risk. I mean, it just kind of makes sense, right? Some of this logic. They think that the people that are making a ton of money are hiding a bunch of money. Okay, whether you like that or not, that's what they think. And the audit risk is commensurate with that. So people that are making over $10 million a year, we're talking super high wealth, okay? In 2020, their audit risk wasn't 0.45. Their audit risk was 20.7%. So almost a fifth of the time, those people are getting audited. So they just have their accountants on notice and ready to go. Anyway, I hope that helps as you kind of manage your finances and get your documents together for your accountant. We'll see you next week on the Real Estate Minute Show. We're here to help you not just buy and sell real estate. We've kind of expanded the show, you could tell a little bit, to help you with financial wealth. You can also check out my writings that I write every week and other posts and videos and such on Substack.com. That's Jay Lieberman on Substack.com. Have a great week.